It is one of the great paradoxes of stock market. What looks high ends up usually going higher, and what seems low usually goes lower. Hello everyone, I'm Ramesh Damani, welcoming you back to the Wizards of Dalal Street of Fresh Breeze. Today a tutorial on how to buy stocks early in a bull market and how to maintain those stocks through a bull and a bear market cycle. Joining me today are the founders of Girik Capital, Charandeep Singh and Varun Daga. Gentlemen, welcome to our show.
Thank you, Ramesh. It's an honor to be here.
Thank you so much for having us here.
It's a pleasure to have both of you guys here. Charandeep, let me start with you.
Sure.
Betting that stocks that are high will go higher is a fairly counterintuitive way to look. How did you stumble upon that trick?
Honestly, Ramesh, it's still counterintuitive. This is something that was introduced to me by Varun. I'm grounded in fundamental analysis from my background at Lehman Brothers. But when I met him...
You bought down Lehman?
Nah, I mean...
I'm just kidding, go ahead.
I've been told that many times. But anyway, so when I met Varun, he talked about this book called How to Make Money in Stocks by William O'Neill and the system called CAN-SLIM. It sounded like mumbo-jumbo at first, but when I read it, I said, wow, this is the way fund managers need to manage third-party investor money, right? So as counterintuitive as it was, it has worked beautifully for us. Of course, we'll get into the detail through this interview, but that was the beginning of our CAN-SLIM journey.
Varun, CAN-SLIM sounds like the new diet formula, but it's at the core of how you pick stocks, isn't it?
The most important thing about CAN-SLIM, I think one can read the formula and the details of the formula. But
for our viewers, CAN-SLIM is a book by William O'Neill, as Charandeep said. Yeah. So please look it up on the net. Right. What are the important constituents of it?
Yeah, so some of the most important thing about CAN-SLIM was that it takes away the bias. So you're looking at stocks which are making new highs. You're looking at stocks which are delivering great numbers. So you don't miss anything which goes up in price and delivering great numbers. So I think that's one of the most important part of CAN-SLIM. Also riding the winners. So you try to identify some of the stocks which are having great numbers and moving up in price, but I think allocating well and riding them, I think that's what CAN-SLIM really teaches you.
Looking at stocks that are making new highs is a way of looking at where smart money is flowing.
Yes, I feel that what happens in a correction or in a down market, the focus of a normal investor is on the 52-week lows or on stocks that have fallen 50% from the peak.
It's like shopping, you want to buy what's cheap.
What's cheap, but nobody looks at the stocks that are making new highs. And what's the amazing part is that those are the stocks which are actually coming up with newer products, which are coming out with great earnings, which are having fantastic management or the change in management or buying out business or...
The N in CAN-SLIM.
The N in CAN-SLIM, new products, new management, new products, new highs. So I feel that that's something which is where the screening is so important, where everybody else is screening at stocks which are low and they're trying to find value at 52-week lows, but I think you can find value at 52-week highs because your earnings the stock could double, but the earnings could have grown 300% or 400%.
The future is full of exciting possibilities.
Absolutely, yeah.
But Charandeep, that is just your entree into the door, right?
That's
so a stock, the screener will throw up a dozen stocks, say, early in a bull market, making new highs.
Yes.
Then your job really begins, right?
Absolutely.
What do you do at part two?
Absolutely. So once part one is done, and part one is done virtually on a daily to weekly basis, we shortlist stocks from the screener that have shown up and meet certain criteria. And then we go into fundamental due diligence. And I'd say this centers around three main things, right? The promoter. We want to make sure there's a human being there that we trust who's all in, as interests are fully aligned along with ours.
All in meaning buying his own equity, keeping acquisitions,
could be buying
or alignment of interest.
That's a great thing, but as long as the ownership is high enough, it's very important that they're focused on creating wealth through the equity route.
And they themselves and the minority.
Yes, and the minority will naturally follow.
Yes.
Right? The second aspect is cash flows. I think that we don't look at profits as much as we focus on cash flows. The history of cash flows, and of course less emphasis on the future of cash flows, but we look a lot at the stability of cash flows of the
business. By cash flow you mean for our viewers the earnings.
Yes, absolutely.
Not necessarily the reported earnings.
Yes, not reported, right? Okay. How much money the business makes inherently. And then the balance sheet. A smart entrepreneur knows how to use the balance sheet. Does not get carried away at the wrong time. Does not get carried away to borrow money and dilute their capital. They know exactly when to leverage their balance sheet to grow. So making sure the balance sheet is well managed through the history of the company is something we're very focused on. And that's why we spend bulk of our time doing due diligence.
So, how do you both guys meet? I mean, how did you meet Charandeep to start your partnership at Girik?
So, I was a kid, and my family office
Still fairly young.
I'm 31. But when we started when I was 24, and I started investing when I was 18. So my family office in Charandeep's dad's office was on the same floor, and I met
his dad, of course, being Darshan Singh, owner of Bank of Punjab in yesterday. He has a very well-known investor in his own right. But
absolutely. So he actually told me that, okay, why don't you manage some money for me? So I was managing I was investing some money for him, and that's when he made Charandeep meet me, and I think the rest is history. And I spoke to him about this whole system I was using, and CanSlim, and we clicked in the first meeting, and we said we have to start a fund, and let's run it.
Let's talk about using the CanSlim method, Charandeep. Early years. Tell me one stock that you're particularly proud of that you picked.
I think there's this mid-cap pharma company that we invested in 2013 called Ajanta Pharma. We first visited this company when it was a 900 crore market cap. We didn't know much about it. It was coming on the back of a lot of earnings growth. So we knocked on the management's door, went and met them. The promoters didn't meet us. Apparently they were too busy running their business. Okay, so we met the finance guys and the investor relations people, who are also very helpful in helping us understand the business. But they didn't guide too much growth, and we said, okay, these guys aren't talking the kind of exciting stuff we are seeing in the numbers.
What's the excitement of the company?
Yeah, so we didn't find any at that point. So we kept track of the company, and we said the stock's doubled again because the earnings have gone up 50-100% in the next 2 quarters.
And CanSlim was kept throwing it up.
It was right on top of our screener.
Right.
It was unbelievable, and we kept plugging away at the fundamentals. I said, look, let's get into the products now. So we vaguely remember there were these 2 products which were north of 50 crore top line, growing at 30-40% CAGR.
Not bad for a mid-cap
for a small
pharma
pharma company. Said these guys must be onto something because they're growing their inherent organic product base so quickly, and they are doing a 300-400 crore round of capex, which when you look back, they did with their own money and not borrowing a single paisa at that point. And I think we finally decided to pull the trigger at 1800 crore market cap. I think the rest is history. Within 18 months, we made almost 7 times our money.
Why don't you take me through something that you almost pioneered CanSlim in your firm, perhaps even in the stock market in India, that you found, and take us through the backstory of how the story evolved.
Sure, I'll talk about a recent stock which has almost gone up 10x in the last 2 years. So there's this company called Aztec Life Science, and the stock had from 2013 to 2014, the stock went up almost 3x, from a 40 crore market cap to a 120 crore market cap.
So it shows up first on your CanSlim, making new highs, right?
It showed up on the CanSlim. Also the earnings were growing. The earnings were just picking up.
The A in CanSlim, the accelerated earnings.
The accelerated growth in earnings, which makes the stock prices move. Then, of course, the quick part, what we did was we dug into the annual reports for the last 5 years and started doing the due diligence, and the size of the opportunity looked very big. But more than that, we realized that the promoter had not diluted and did a huge capex of almost 80 crore within 2 years, and that capex was coming on stream. So they were almost sure of doing much higher earnings, and the earnings were depressed because of high depreciation and interest.
Normal fund would have gone and bought 100,000 shares, 200,000 shares, but you actually gave a check. You took a fresh issue of equity from the promoters. What gave you the courage to do that?
When we first met, it was very hard to meet the promoter. We tried a lot, and it was difficult, and that's what we realized, that promoters that don't meet are one of the best promoters or best companies to back. So the Oxford graduate,
Ashok Hiramath, of course.
Ashok Hiramath, he had huge passion in the chemistry, the products he was developing. He was talking about how his product has more purity than ExxonMobil, and it was amazing to see that. And
you had no angst when you gave him a check directly, saying it was probably locked in at that time.
Right.
No angst.
No, we didn't actually. We went through the plant. We saw that same passion in his people, and that really told us that okay, we are convinced and we are happy to invest.
A year later, I know this, that you were validated. Godrej came and bought over Aztec. So how do you guys celebrate? All-nighter?
Actually, it was a mixed feeling. Initially, we were very disappointed because
Disappointed?
yeah, because we generally backed the people and the management, and now we thought this management, this person who were backing and who we thought could create a great business, is going out of the business and sold his own stake, which we generally don't like. We like managements to buy their
Skin
own
in the
stake.
game, as you
Skin
say.
in the game. So we immediately, the first thing is we called Mr. Hiramat, and he said that you know, you have nothing to worry. I still have 10%, and I'll work 3 times more for my 10%.
So Girik is going to be run on this basic formula: can slim, due diligence, extreme focus on a few stocks.
Yes, I think you said it. I think we continue to screen and we'll work as hard to do the due diligence. I think we spend most of the time doing due diligence. The formula is simple, Ramesh. It's not the rocket science. It's just process, you know.
You know, Jesse Livermore, a guy I know both of you admire, said there's only one side to the street, not the bullish side, not the bearish side, but the right side.
Right side.
I think both of you picked some amazingly right stocks. Thank you so much for dropping by to chat with us.
Thanks for having us. I really appreciate your time.